Money Morning Rundown, Business First with Angela Miles.
Hello, everybody. I'm Angela Miles at the Chicago Board Options Exchange. Thank you for watching. Coming up on the show today, Fed frenzy. Traders brace as Federal Reserve Chair Janet Yellen forecasts a Fed move. Investing 101, the Fed and your funds as rates rise this year. Snap to it. Why traders are turning to Facebook and Twitter for clues on trading the latest social media craze. And the man who created the $1 million cup of coffee is here with a scoop on how average returns in the stock market can quickly become below average. On the economic calendar, it's factory orders. On the earnings calendar, Casey's General Stores, Famous Dave's, and U.S. Auto Parts Network. Here's a look at the market action from Friday. In our trader rundown today, I'm joined by Dan Deming of KKM Financial, and normally we would now be dissecting the jobs number, but that will actually come out on March 10th.
Right.
A long wait for this number, but it just is happening because of the calendar set up for the month of February.
Yep.
So we won't talk about that other than it's coming. What do you think about the jobs report on Friday?
It is coming, and I think it's significant. Also, ECB is coming as well. So we got a couple of things on the docket this week. But really, I think the unemployment report is very significant because now, last Friday, the Fed went into their quiet period. They're not going to be speaking before that Fed announcement on the 15th. But I think they're going to be very focused on that number, particularly the wage number, the wage component of the unemployment report. That again, will be an indication of inflation pressure, and that's what they're really looking at.
Foregone conclusion that we will get a rate hike in March?
Wow, last week I think we were speaking that it probably wasn't coming, but yes, it looks like now better than 80% chance that they will move in March, and all indications are based on the information that was given last week by the Fed officials. Were hinting at the fact that they would move sooner rather than later.
Traders are still talking about that Snapchat IPO last week. Why do you think that's happening? It's still big news.
It is. Well, it's because of valuations and trying to justify or even put into context what the valuations are relative to Facebook, Instagram. Well, I guess with Facebook by Instagram, but Facebook and Twitter and some of those other social media sites. What is the true valuation here? And I'm telling you, Angie, when I saw last Friday the 28 print on that reminded me of some of the things we were seeing in 2000 during that crazy IPO and penny stock era leading into the 2000 era as well. So I don't know. This is getting a little frothy here.
Do you think this is calling a tap to the market?
Well, I don't know. Possibly. I think when you start to see valuations of this magnitude, given the fact that we really don't even know what the value is, and you're basing it off of some of the other, Twitter has certainly not performed well, and Facebook has performed well, that, it's a gray area. And I do think that when you see something like that happen, particularly the run out after the presidential speech, and this on Friday that we saw last Friday, those are two indicators that maybe this market's getting a little ahead of itself.
Thank you for coming on the show.
Oh, thanks for having me.
Topping our news, it's being called the trial of the century, and it gets underway this week. The leader of Samsung, J.Y. Lee, will be in court facing claims of bribery and embezzlement on Thursday. It's connected to a corruption scandal that shook South Korea and led to the impeachment of the president. Samsung Group denies any wrongdoing. The trial is expected to last 3 months. Fiat Chrysler has been hit with a discrimination class action lawsuit. The suit alleges the car company had a practice of giving lower performance scores while using photos of older workers. It translated into lower pay and fewer promotions for those employees. General Motors is expected to sell its struggling European Opel division. According to Reuters, French automaker PSA Group has reached a deal with GM. GM has lost an estimated $20 billion overseas. Cyprus is finding an economic ally in tourism. The country anticipates 5% growth in the number of visitors it welcomes this year. If that happens, 2017 will be another record-breaking year. Tourism accounts for more than 20% of that nation's economy, according to the Associated Press. Closer to home, Walmart and Wingstop are a couple of companies getting pinched by the delay in tax refunds. A law went into effect in December of 2015. It stops the IRS from issuing refunds until February 15th. According to recent analysis, refunds were lower by $14.7 billion compared to last year. Now over to CME Group for today's Trader Tip.
Hello, my name is Ben Lichtenstein, and I'm coming to you from the floor of the CME Group here in Chicago. Friday, kind of a low energy trade after a big week last week. We closed the week out with somewhat subdued, kind of limited follow-through type price activity. Now, this has been very characteristic of what we've seen in the S&Ps, the NASDAQ, the Dow, and the Russell over the last weeks and the last couple months, if you will. Again, last week we saw new all-time highs. We saw all four majors into new all-time highs, and the dollar actually exhibiting a little bit of weakness in reaction to Janet Yellen on Friday. I think the real key focal point at this point should continue to be the dollar and the currencies. I think we should also continue to focus on the new all-time highs and the bid activity that we continue to experience as far as the S&Ps, the NASDAQ, the Dow, and the Russell go. Well, so the focus has been on the S&Ps, the NASDAQ, the Dow, and the Russell. And again, for the most part, the continued new all-time high print. So again, I don't think any real end in sight, if you will, but I'd be focused on a real shift, if you will, in terms of real energy, in terms of real participation levels. And I think that would accompany some downside activity if we were to see that. As of right now, continued bid activity across the board. Again, my name is Ben Lichtenstein, coming to you from the floor of the CME Group.
Thank you. Construction of the Keystone XL pipeline continues, but not necessarily with American-made steel. Politico was first to report the White House decision to give the pipeline a pass because it was already in the process of being built before President Trump's requirements for Made in America products. Also making news in politics and money, the jumping peso. Here's that report.
U.S. Commerce Secretary Wilbur Ross says the peso could see a substantial recovery if the United States and Mexico can come to terms on a common-sense renegotiation of NAFTA. In a CNBC interview Friday, Ross says the peso's taken a hit because of the uncertainty surrounding what's going to happen. In the past year, the peso is down about 8%, and that's raised the costs of imports into Mexico and made its exports more competitive. According to Ross, the first emphasis, facilitating U.S. exports to other countries, getting rid of both tariff and non-tariff barriers to trade. The other side, preventing illegally subsidized goods from entering the U.S. and really enforcing it. An estimated 20% of U.S. cattle inventory is in areas that are facing drought, including conditions that have led some livestock producers to sell off their herds early because they don't have enough hay. The Great Plains drought of 2011 to 2013 dropped cattle levels to their lowest numbers since the early 1950s, and that in turn led to a brief but sharp spike in cattle prices. Herds have been making a comeback since then, but the drought conditions have led to another issue: winter wheat. Farmers in drought areas have pulled herds from feeding on the crop to give it a chance to grow. That means farmers being hit with higher prices on the feed they need to replace the natural one. A government meteorologist says the area affected by the drought runs from Alabama all the way through the southern Appalachians. And even with some areas getting rain over the winter, drought recovery is far from over. You might want to get to know Joe Burke. He's a Connecticut attorney, but he's probably better known in some circles for his comic book collection. It goes on display March 11th in New York. Over 45 years, Burke has collected 18,000 books and 300 pieces of comic book art, and it hits the auction block May 15th.
The man who created the $1 Million Cup of Coffee is here with a look at how averages can sometimes be misleading.
Hi, I'm Mark Horner. $1 Million Cup of Coffee was created to help everyone take control of their financial destiny. According to the National Weather Service, the average annual temperature here in Chicago is 49 degrees. So with that kind of weather, it sounds like the only clothes you'd ever need would be a few pairs of pants and a light jacket, right? Anyone who knows Chicago, though, knows you'd freeze during a Chicago winter and be a sweaty mess during the summer if that's all you had to wear. To stay comfortable in Chicago, you need shorts and t-shirts for the summer and a warm coat, hats, and gloves for the winter. And investing is similar. The long-term average return for the S&P 500 is around 10%. But since 1926, the S&P has never actually returned 10% in any one year. In fact, since 1926, it's returned between 8 and 12% only 6 times. That's 6 times in 90 years. So investors expecting long-term average returns almost never get them. Instead, they get up 7, down 4, up 14, down 5, up 20, down 10, and so on. So no wonder many investors have difficulty sticking with their investments. So what are you supposed to do? First, understand that averages can be misleading. Then, construct your portfolio like the closet of someone who lives in Chicago. For your investment wardrobe, that means large and small company stocks, high-quality bonds and speculative bonds, real estate, and other asset classes. That way, your portfolio will be ready for whatever kind of market weather comes your way. I'm Mark Horner, MillionDollarCupOfCoffee.com, and on Twitter at MDCupOfCoffee.
Coming up, why traders are paying attention to Twitter and Facebook when setting up trades in Snapchat. Plus, the Fed appears to be closer to raising rates, what that means for your money. And in our final trade of the day, a trader drills down on an oil stock. Business First AM continues after this. Welcome back. Let the market cap counting begin. On Friday, Snapchat's valuation topped $28 billion. MarketWatch reports that makes Snap more valuable than Hershey and Twitter. Other cap counters say that value is actually greater than 378 companies in the S&P 500. NBC Universal is taking a shot at Snap. Here's that report.
NBC Universal has invested $500 million in Snap. That's the parent company of Snapchat. NBC Universal says the investment is in line with several deals it's done to align itself with digital content heavyweights like BuzzFeed and Vox Media. If you think the Google Pixel and Pixel XL are the best smartphones on the market, rest easy. Google's Senior Vice President of Hardware, Rick Osterloh, confirming the company will be releasing a new Pixel smartphone in 2017. The bad news, Pixel will remain a premium-priced device, meaning you probably won't see a starting price under the current $650. There are hints the second-generation smartphone will have a better camera, faster processor, and possibly waterproofing.
We are getting a trading edge today with Joe Gitz. He is the founder of Social Market Analytics, which looks at all the posts and all the tweets that come through, and then traders use that information to make trades. So great to have you here.
Thank you for having me. I'm happy to be here.
What's hot right now? What are you seeing?
Right now, Snapchat, and Snapchat. On Thursday of this week, Snapchat went IPO, and prior to market open that day, we saw volume that was the single largest social media volume for any IPO that we've ever tracked, one. And two, the sentiment on Snapchat was ridiculously high. It was actually number 3 on our list of all the securities that we cover.
That is unbelievable. Now, you're also watching for trades on this, though. So if I'm a trader and I'm taking a look at your analytics,
right,
and you're telling me this, what do I do with that?
So sentiment means a couple things. And the way that we calculate it, we take the current conversation and we turn it into a quantitative feed. So stocks that have a high sentiment prior to market open, they go higher at a statistically significant level. Those stocks are going to move higher. And if people are talking about that security more negatively than normal, that stock's going to move lower at a statistically significant level. And so we take this data and we make it available to traders, portfolio managers, hedge funds, and it's a leading indicator of stock performance.
But should an average trader maybe put more into this trade than just what you're saying? I mean, you should be looking at other factors, correct?
Absolutely. So social media is an additive indicator. So you have your value, your growth, you have your fundamentals, you have your pricing momentum. Social media is another indicator. And we're sitting here on the floor, and I look at social media as a new feeling of the pit. So
okay.
It's what people are saying when I'm dating myself, but when I first got into this business, you could feel the energy in the pit change. People said the size of the pit expanded a little bit. That's what social media is now.
And it's working.
It's working. It's working in a big way. Stocks, they outperform, and people are adding it into their quant models. And we recently launched some indexes with the SIBO. And those indexes help people to take advantage of what's being said on social media.
Now, we also have a president who likes to use social media. So what are you seeing there right now?
Well, actually, we had to make a little bit of a modification to some of our parsing to handle a stock being trumped. So if our president tweets about a security in a negative manner, and it's actually expanded to mean generally that a stock is going down because someone said something about it. So we actually added the word Trump to our dictionary, to our dictionary to track a stock that's going down because of a comment in social media. But if I could have a message for our president, Mr. Trump, please continue to tweet.
Traders are loving it. Well, thank you so much.
You're welcome.
Keep us posted.
Thank you for having me.
Come back soon.
All right, thanks for having me, guys.
Coming up next, Investing 101, why you may need to watch your wallet as the Fed prepares to raise rates. And in our final trade of the day, drill baby drill, the oil-related stock that options traders are gushing over. Business First AM will be right back. In Investing 101, we are talking about the Fed and your money with Frank DeVincentis, and he's a senior VP with Morgan Stanley here in Chicago. So happy to have you on the show.
Thank you for having me.
This is happening. It looks like the Fed will raise rates. So what does this mean to the average consumer?
So there's really two ways that you can think of it affecting the consumer. One is on the savings side. So your money markets, those accounts that really haven't been getting much of any interest rate, those are going to start to move up. So you might start to see a little bit more interest coming into those accounts. However, on the variable debt side, so this could be anything like credit card or auto loans, those interest rates are going to step up. So you might be paying a little bit more on your monthly payment for that debt.
Now, the Fed moves very slowly with these hikes. Why is that?
Well, they don't want to shock the economy. They really want to telegraph their movements and make sure that the market is ready and prepared to handle whatever they may be putting out.
So now that we know that it's going to be a slow, incremental move and rates are going to change, what should people be doing with their money? How should they be investing?
Well, for sure, the investment needs to be based upon a long-term plan. However, there are a couple of things that you just want to make sure are in place. You know, one thing, take a look at your fixed income allocation. Any exposure to long bonds might start to suffer in a rising interest rate environment.
You're exactly right.
Yeah.
Some of the pros are saying to be in a 30-year bond is not a good place to be. What about a 10-year?
Yeah, 10-year bond, to own a 10-year bond, I would also say, it needs to speak to the plan, but you really do have to watch out for interest rate movements. As an example, the 30-year bond in the fourth quarter was down nearly 15% because of the interest rate movements.
How should we consider what's happening with the Fed and some of the policies that are coming out of the White House?
That's a great question, and one that they're trying to figure out as well.
A lot of question marks right now.
So for sure, the Fed is going to be looking at the fiscal actions that the White House is going to be taking. Those fiscal activities will either spurn growth, and at least that's what they're expecting, and the Fed, who wants to keep stability in prices, might respond, and this is one of the ways that they would respond, increasing that federal target.
Well, thank you for coming on the show. We appreciate you
Pleasure
here for
for having
Investing
me.
101.
Thank you.
Still to come, why small cap stocks could be setting up for a big time move. Our final trade of the day is next in Stocking Up. Scott Bauer, Trading Advantage, is here for our final trade of the day. He's watching the Russell for us, and I think the small caps that make up the Russell are going to get interesting.
Yeah, and this index is really percolating again, Angie. What we're seeing now is lots of call buying. You know, that has now shifted back from this massive amount of put buying now to some upside call buying in the Russell. And you know, like you just said, the small caps are really now a space again, even though they've had quite the run, where it looks like that may be the index to watch over the next coming weeks.
I think so too, because behind the scenes, traders are talking about the president's plans for tax cuts. Now, this could really be a benefit to small cap companies in the United States. And if they get cuts, maybe their profits start to boom, and there goes the index.
Yep.
You're also watching an interesting trade in the oil patch. What are you seeing there?
Yeah, there's a stock, ESV Ensco, that reported earnings actually on the 27th or 28th of February, and just Friday, some very unusual option activity. The March 10 expiration, March 10 strike, regular expiration, so going out about 2 weeks. There was a massive call buyer, really unusual, over 10,000 contracts of these, and the stock was trading right around 10. So it's just going to be interesting to see what happens with that, because this is, somebody that came in looking for a very, very short-term play and a pop in this stock. It'll be really interesting to watch.
Thank you for coming on the show.
Always a pleasure.
It's time for us to close up shop for today, but we are on social media. It's Business First AM on Facebook, YouTube, and Twitter. Coming up in our next show, Millennials and Money. Thank you so much for watching today. Have a great start to your week.